Alrighty, guys, so the markets just opened up about an hour ago, and as of now, it's a mixed bag. We currently have the S&P 500 down 0.2%, the Russell's up 0.4%, we have the NASDAQ down 0.4%, as the Dow is doing the best of the bunch, up about 0.3%. So we have to briefly break down the markets in this video, and like you all saw in the title, I want to focus on this piece of data, well, a lot of data that I found in this table that shows that Fed interest rate hikes aren't necessarily bad for the stock market. We're going to break down a bunch of things in this video, so if you all find value, hit the like button, subscribe, join my Patreon, and make sure to get your 5 stocks for Moo. Free money, guys. Link down below. All you have to do is use that link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. So let's talk. As of now, like I said, the markets are a mixed bag. SPY's down about a quarter. We have the Russell up 0.4, NASDAQ's down 0.4. And what we're noticing here, I want to focus on SPY and Triple Q very quickly, guys. What we're noticing is a break under both moving averages on SPY and on Triple Q when it comes to the 20-day 1-hour chart. And on top of that, I'm personally noticing a death cross on Triple Q, which is pretty bearish, and on SPY. The death cross on SPY is occurring today. It's starting to play out today. And I'm also noticing clear resistance towards the top of this wedge on the 20-day chart, right? We're clearly seeing that rally we had last week ended up being a bull trap, and now we're trying to potentially sell off under the support of the wedge, which if this breaks, guys, 440 on SPY, the support of the wedge, and on Triple Q, let's say we break under roughly 350, this is going to get ugly. I think we might start selling off pretty aggressively under that point. And as of now, large caps are selling off. We have good old Google down about, let's see here, what is it? Down 1.3%. Facebook's down 1.5%. We have Apple. Where are you, Apple? Amazon. Amazon's down about 1.1%. Apple, I can't even find it. Where is it? Oh, actually, Apple's up. Apple and Microsoft are barely up, but overall, big tech is leaning more towards the red. We have Nvidia down 2%, Snap's down about 7%, oil's taking a hit today, energy's taking a hit, a lot of small caps, so we are selling off so far today. And going to that table that I mentioned in the beginning of this video, this is going to blow your guys' mind, and it's going to show you that maybe this panic around interest rate hikes, maybe it's all for nothing. Maybe it's all for nothing. Seriously, guys. So let me show you this. Let me pull this up. This is a Market Watch article. And no, I do not, or this is not sponsored by Market Watch. It's not sponsored by Market Watch, guys. Don't worry. But it is sponsored by Moo. Get your 5 stocks down below. This is a table by Market Watch, though. And shout out to them for putting it together. This is pretty good stuff here. So let's run through this together, right? What we have on the top is rate cut, a chart that shows rate cut cycle starting and ending, right? So the start of a rate cut cycle, the end of a rate cut cycle. That's kind of a tongue twister there. And how the stock market performed during that time period when it comes to the Dow Jones, S&P, and NASDAQ. That's on the top, right? And on the bottom, we have rate hike cycle start and rate hike cycle end, and how the markets performed during a rate hike cycle start, or just throughout the whole rate hike cycle process, stemming back from, this is the late 80s, or actually early 90s for the hike cycle, or the hike cycle start, late 80s for the cut cycle start. So let's talk about let's briefly look at rate cut cycles and see how the markets perform during that. Then we'll take a look at rate hike cycles. So in 89 to about 94, this is when the markets, or the Fed, was cutting rates, right? And look how the market performed during that 5-year period. The Dow went up 60%, S&P up 50%, NASDAQ up about 80%, and then in 95 to 97, they were cutting rates again. Dow went up 49%, S&P 45%, NASDAQ about 32%. And then in 98 to 99, you guys know that time period, they were cutting rates again. Dow went up 33%, S&P up 29%, NASDAQ up 52%. So during that, those couple of rate cut cycles, rather, in the late 80s into the late 90s, that 10-year period, the markets were ripping, right? And then you guys know what happened. The dot-com bubble boom, it went bananas. It burst, right? In 2001 to 2004, we had rate cut cycles. We had a rate cut cycle again. Dow went down 2.2%, S&P down about 11%, NASDAQ about 11% as well. Then in 07, 08, they were cutting rates again. Markets got decimated. You guys know that. The Great Recession. We all know that. Dow went down 36%, S&P down 41%, NASDAQ down about the same as the S&P, down about 41%. And if you guys are following me, you can see this, right? Let me make sure. Yeah, we're good. Now, let's talk about the rate hike cycle, because we all know we've been seeing cuts over the past couple of years here. Let's talk about rate hikes. How has the market performed during rate hike cycle? So in 94, February of 94 to June, or rather July of 95, right? So about a year and a half, roughly, they were hiking rates. Dow went up 16% during that time period. S&P went up about 14%. NASDAQ went up 18%. I wish I knew what the Fed funds rate was during these time periods. That would be a great piece of information that they probably should have put in this chart, but it's okay. We're going to run with this anyway. So in 94 to 95, they hiked rates, right? Dow, S&P, NASDAQ, all of these went up. In 97 to 98, March 97 to September of 98, right? Dow went up 17%, S&P 32%, NASDAQ up 40% during that hike cycle. And then in 99 to 2001, they were also hiking rates, and we saw a bit of a decline. Okay, Dow went down 1.6, S&P down 5%, NASDAQ down about 13%. And in 2004, June 2004 to September 2007, they were hiking rates again for that 3-year period. The Dow went up 29%, S&P up 30%, NASDAQ up a whopping 27%, right? And in 2008, they did the start of this little hike. It didn't last really much. I mean, it was barely anything. But 2008 to 2019, right, they were doing some hikes in here and there, some fake outs, whatever. S&P went up 243%. NASDAQ up 440%. Dow up 213%. So based on this data that we have right here, everybody that's freaking out right now about interest rate hikes, essentially, you're freaking out for nothing. If you're freaking out, go back and look at the numbers. That's what it takes, guys. Do some digging. Look at history. Look at what's been going on in previous time periods where we're seeing, where we saw what we're seeing today. In other words, interest rate hikes. And you can see clearly, based off what I said, we had one period in time, stemming back from the mid-90s, one hike cycle where the markets were red. And it wasn't that big of a red period. Again, from 99 to 2001, Dow went down about 1.6, S&P down 5%, and NASDAQ down about 13.3% according to this chart here. So don't freak out. We're going to get some hikes. Fed's probably going to raise rates to maybe 1%, maybe more, maybe less. Who the heck knows, depending on inflation, jobs, all this crazy stuff, the economy. And the truth is, I'm going to continue investing throughout all of this. I'm not going to be one of these guys that's like, oh, I'm going to time the rate hikes. I'm going to time the hike cycle here, guys. I'm going to time it, and I'm going to end up coming off on top. The truth is, I'm not going to do that. I'm going to be focusing on strong companies with good cash flow, profits, strong moats, companies that are very powerful. I'm going to be buying these companies. I'm going to be buying the S&P 500. I'm going to be buying some total, world index funds, which I've been buying. What's the one I've been buying recently? VXUS. I started buying that, which is a total international index fund. I think it's got mostly Europe, China, stuff like that, and other places, of course. And that's what I've been doing, guys. That's what I've been doing. I'm not freaking out about this rate hike. I do have a little bit of extra cash, on the sidelines. But other than that, the data shows we really don't have much to freak out about, much to worry about. So I hope you all found value in this video. If you did, hit the like button, drop me a comment, let me know your thoughts, and make sure to subscribe and get yourself 5 stocks from Moo. That's linked down below. All you have to do is use that link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Make sure to join my Patreon as well. All that, plus the free money, M1 Finance money as well, Webull, Moo, all that good stuff is linked down below, guys. I'll catch you guys in the next video. Peace out.